So the Feds have decided to pause rates. What this means is that they feel a little bit optimistic about next year. They feel like inflation is a bit under control where it's at, because 3 times in a row they've actually paused the rates and decided to not hike it. Fed has raised rates 11 times since March 2022 to combat high inflation. Still, the central bank hasn't crossed the finish line just yet. Officials are expecting inflation to cool next year at a slightly faster pace than previously estimated. The market is reacting a little bit. We're going to look at the 3 major indices, Dow Jones, NASDAQ, and SP 500, just so you can see the reaction based upon this that's been happening. Another thing I got to say about unemployment, they want to see pain in the economy. It's so sad that they have to see a mass layoff. Pretty much unemployment has to reach like around the 10-15% mark. Not 80%. 80% is very drastic, but they try to target like 10-15%. Then they have the urgency to actually reduce rates, because then it provides enticing benefits to people that want to lend at a lower interest rate to be able to function their companies so that they can hire more people. And for now, some are hopeful. The central bank is in the midst of achieving the elusive soft landing, a scenario in which inflation returns to the Fed's target without a sharp rise in unemployment. Because what we've seen is every economic cycle, mass unemployment, home prices crashing like crazy, the stock market crashing, and that's what spiked them to cut interest rates and then create that stimulation inside the economy. But when they say soft landing, is that they do it slowly so that way it doesn't cause that harsh market crash. Things are tough, and we're going to look at some of the real estate too, crunching some numbers just to show exactly where things are at in terms of home prices. The job market has slowed steadily but remains solid. I don't think it's solid, but I think it has definitely been much more steady. A lot of people in the tech sector, because I'm in it, I've seen a lot of layoffs, but I've seen a lot of hiring happen. It seems to be at equilibrium right now. It's not at a point as it was in 2022, because there was a huge demand, not enough supply of developers, designers, people in the tech space, even recruiters as well. There was such a huge surge of demand, but not enough available people to actually do the work, which caused people to ask for more prices, salaries were much higher, etc. That's just how things work when it comes to supply and demand. But now we're seeing things a little bit more stabilized. Me, I'm staying stagnant in the sense of pay. Like the rate that I'm billing my client right now is the same rate I'm going to bill early next year, unless I get other clientele inside of my business. Then we're going to fluctuate in that sense, because the economy is a little bit flat. When I'm putting most of my resources at, when I say resources, is money that I earn, assets, is actually converting them into stocks, crypto, so that way they can bloom up. Once the economy really stabilizes, then the value of these assets can grow. So then, although my earnings remain flat, my net worth still tremendously has gone up once that time comes. And that's how you got to think about it and treat it that way. If your salary you see has not gone up, and it's going up by like 3%, which is way below the inflation mark, this is what you got to do in order for you to stay upkeep with your net worth. For your net worth to stay balanced with the market, to actually like stay on pace with things are at, you have to do that. If you don't do that, you're going to be left behind every single year. Their economy remains resilient in the face of elevated interest rates, which is why some have grown more confident about the prospect of a soft landing, but that still isn't a guarantee. Even though inflation remains above 2%, the Fed has a lot to be happy about. And all this is pretty much true. And let's just take a look at the major markets real quick. So SP 500, 4,700, right? This is just today. So right after the meeting, look at this, 4,600, right after the meeting, boom, it went up 100 points. Not that much if you're looking at it from the percentage perspective, right? Dow from today, same thing. They both happen around the same time, 36,500 to 37,000, about 500 points. And then NASDAQ from 14,500 to 14,700. And if we look at the past few months, as interest rate cuts have been happening, the market, I've seen it respond more positively, meaning people are starting to buy more stocks, more crypto now. And we're going to see the spike in crypto that happen. Part of it, I do think, is because of the pause in rates. Although that the pause in rates is happening only in the U.S. side, I'm not sure what's going on with the other countries, but it seems to have spiked the amount of demand that's been happening inside of crypto. So from October actually, end of October, this is where we were at. And we can see the rise in rates, right? The slowdown in rates have caused the rise inside of the indices, right? So NASDAQ was down all the way to 12,500 to now being 14,700, about 2,000 points. SP 500, right, from end of October, 4,000 to 4,600. It's about 600 points. And then the Dow from 32,000 to 37,000, almost 5,000 points that we are seeing for this. So the market is reacting positively with the whole interest rates being at a steady pace, because people have to get reaccustomed to this new rate now where grocery prices are. When you increase interest rates, it creates a shock to the economy. They're like, oh, we don't know what to do. We're panicking. We need our cash. This is how the market reacts. Even in reality, it's not really like that, right? You don't really feel it right away, but the market tends to try to be ahead of time in terms of where it thinks the economy is going to be heading. And then once things are stabilized, it gets to be more of a new comfort zone at this point in time. So this new price point that we are at with everything right now with inflation, it becomes a new comfort zone. So everything gets to be readjusted. And as things are being readjusted, people are going to put more money into stocks, crypto, and different things. Remember, there's like $5 trillion that's sitting around as cash, which can go to real estate, which can go into the market. And if it goes into the market, crazy. Prices of some of these stocks is going to go through the roof. Price of homes possibly may go through the roof. Some of the things that may affect the home prices we're going to get into. But this is where I'm seeing right now. Everything is in green today. I love my grayscale. And as we can see, grayscale from the past, I'm going to look at BCHG because from the end of October, we seen it was around $1.60, but it's been acting pretty positively. Grayscale is linked to crypto. So as crypto goes up, it shoots up as well. Right? Most of the stuff are pretty much in green for the most part. Our crypto right now. So first, let's take a look at Binance. I know they have some regulatory stuff that they're dealing with the U.S. government, but if we look at them for the past like 6 months, from end of October 208 to now 254, they have gone up, right? Just like the rest of crypto. Shiba Inu, another meme coin. It was at 0.000007, right? 08 to now being at 10. So it went up by about 25%. Near, one of my favorite ones, it was at $1. I purchased some more around $1 and it went to 232, which is great. Cadena, another one. It was at 42 cents. And I remember when this was happening, I was like, oh man, this is great. Get some more. And now it's at 72 cents. So I just keep buying down as I see it go below a certain price point. I just dive into it a lot much more. Litecoin is pretty stagnant, right? End of October it was like 60. I mean, yeah, it did go up, but it's still stagnant. Like I expect it to be at the $100+ mark range right now. It has some way to go, but we're going to get there. I trust in them and I have a lot. Let's look at Bitcoin because Bitcoin has done a phenomenal upturn. I did not see this coming because it typically grows slower than all the other ones. This time it is the leader that's increasing way faster than all the other ones. I guess people feel that it's the most secured, most capable, and also remember that a lot of ETFs are linked to it or being linked to it as it gets approved, like the BlackRock ETF, right? The one Grayscale filed also. So as more money is available to pull into these ETF, which are being used to actually purchase this, it's going to make the prices of things shoot up. So end of October was at 27,000 and it went up to 43,000. $16,000 per coin. Insane, which is pretty great. I still don't own a single Bitcoin. My target price was 10,000. I said, if it ever hit 10,000, I'm going to purchase one Bitcoin. It may never. And if it does, my money's going to be sitting here waiting. The only other way I'm going to do that is from Ethereum, Litecoin, Ripple, any of these coins I have the portfolio value amassed to be so excessive, I will convert some of it to Bitcoin because I feel Bitcoin, again, it's like gold. It's more of that stabilized, and I want to make sure I diversify enough to always have something in it. But right now I don't because I'm looking for growth. So this is what's been going on with the market. Stocks are rebounding quite a bit right now. It's not at a point where it's at all-time highs. We still have a lot of room left to grow. You still have a lot of opportunities. Just keep buying. If you're doing the recurring buying on a weekly, monthly basis, keep doing that. If you're buying the dips, of course, have your cash ready, set aside. This is my strategy. I just keep buying as much as it keeps going down. I keep putting a loop of money in at different times and have money cash set aside. Now let's jump over to the real estate side real quick. Market. Where are interest rates at right now? 6 3/4, which is pretty insane. I remember a few months ago, I was looking at this. It was at 7.75%, right? This number is what we're looking at. This is the actual rate of where we at. Now we can get a loan at 6.75%, which is great. You could save quite a bit of money. For me, for instance, I think that's about $300 or $400. That's based on a $600,000 purchase, right? But the market is still not where it needs to be. The demand is still high. Even though there's a low amount of supply, the demand is still high. There's still bidding wars going on. The sellers out here are still garbage. They're still trash. These landlords, slumlords that are trying to sell these properties, horrible, right? That's all that we see on the market right now at this moment. It's just not looking good. And we're going to jump into one area here, which is my area, my zone. So Jersey City, all multifamilies, right? This one was listed today, 6-bedroom, 2-bath. This is how you can tell the demand. It's listed for 1 day, 24 saves. Usually a 1-to-1 ratio is what we try to look for. A 1-to-2 ratio is decent. But 1-to-24, it's like, what? Like, so many people just want the same house. And it's not like this financially makes sense, I feel, like, unless you're putting a huge down payment. And let's calculate exactly to see how much this costs, right? So $625, $10,000 in property taxes, right? $625 closing costs. Let's say we're at 6%, considering FHA, about $35,000. So let's say $660 is the number that we're gonna go in with, right? And we're putting 3.5% down. FHA interest rates. Yes, let's use the 6.75 number. Property tax. Your property tax will typically go up because that's just how it is. So I'm going to use 1.75 because what it is, they base it off the higher value of the home. That's how the city assesses it. It happened to me. My property taxes went from $4,500 to $8,500 in a year, and now it's at like $12,000 and change, almost $13,000. Homeowners insurance, I'm paying around $3,000 right now, so let's go with that number. And this house is a little smaller than mine. And utilities, we're going to put down HOA fees. So let's say you have $500 in expenses since it's supposedly 2 units. You don't even have a finished basement. This is your monthly payment estimated, right? With your utilities and everything, $6,300. Now, how much can you rent this for? Well, I can tell you right now, 2 units. If so, it says first floor is 2 bedrooms, second floor unit 2 offers 4 bedrooms, 1 bath. You can probably make like $2,800 from that one. I think maybe even $3,000. 2 bedrooms, you'll get $2,000 for that right now. If it was 3, you could get like $2,400, $2,500 for it. But 2 bedrooms, yeah, maybe even $2,100. But let's use $3,000 plus our $2,200. You're at $5,200. You're still $1,000 short. This makes no financial sense at all. What number would this have to be to make sense? How about $550 all in, right? Now we're talking, and the interest rates was at like 5% maybe. Now we're talking, right? This would have been all right, because at least if you rented the whole thing, you would have at least been in a good space. So I feel it's going to take a combination of both the interest rates and home prices to come down. And just me crunching this right now, from $600,000 to about $500,000 is about $100,000 mark. So this is 1/6. So that's about 20%. If home prices fall 20% and interest rates fall about, what is that, 40% from 6.75 to about 5%, I don't even need it to get to 4. Then a lot of these homes are going to financially make more sense now. People are going to see an enticing reason to really buy. But right now, I'm telling you right now, some of these homes you step into, these landlords are horrible. Home is in bad condition. They have no good negotiation or business tactics. They're just trying to make a sell and just get rid of things. It just doesn't add up at all. This is where the market is at right now. I feel a bit optimistic about next year, the Fed rate cuts is not the only thing that's going to matter in terms of people buying more homes. And that might cause an opposite reaction too, because if we start seeing borrowing spike up, and it might increase inflation again, which will cause them to increase rates again, and that might actually trigger a full market crash. Because when people start doing something excessively out of control, these are some of the things that actually trigger the market crash. So the Fed is being very conservative. They're being very careful. I do applaud them for their strategy in that sense. They are not God. I always say this: seek first the kingdom of God and his righteousness, and all things will be added on to you. Although I'm telling you about this, how I feel about next year, the interest rates and all these things, you gotta seek God first. Because at the end of the day, a lot of this doesn't really matter. Like, I don't feel afraid. I don't feel fearful, because the worst that can happen is the world ends. And at that point, I know I have my peace with Jesus Christ. So my financials, I'm not too worried about dumping money in. As I see people are selling stocks like crazy, it's the best opportunity to buy in. And if homes are being sold like crazy, just like stocks or have been last year, then it's going to be an opportunity for me to buy in and step into. But right now, it just doesn't seem like it's the right time for real estate. But I am doing that for stocks, because there is a lot of opportunities in stocks and some crypto right now. So hope you enjoyed this and found this insightful. I know I didn't post last week because I was a little bit under the weather. I was recovering from a bit of a stomach issue. And I know I'm posting a little later than usual because I wanted to wait for the Fed's meeting that they had today in order for me to get this to you. So peace and love. Trust in Jesus. Have an amazing one. Thank you so much for checking out my video. My goal is to be able to share as much knowledge, wisdom, experience that I've been given, privilege from God over the years, to be able to give that to you, and also be able to receive from you as well. This can definitely be a two-way dialogue. It doesn't have to be one way at all. It's just for us to be engaged. And I'm just continuously sharing as things that I see move along the market. So I hope you find insights, and your feedback is greatly appreciated as well. How can you support me? Right now, I have these wristbands. You can get them at Luxtro.com. I've been selling them on eBay for quite some time. It just says make your statement. It's just an encouraging, inspirational message. You can purchase these right now, available on there. Eventually, it will be spun off to other things, and I'll have other products, but that's one way you can do right now. But most importantly is just making sure you receive something from the content I've given. And if you have any feedback, that is probably the most valuable thing I could say you can give to me. So I appreciate it, and I hope that we can continue to build a long-term relationship with each other and just grow with one another. Peace. And if you have any questions, definitely drop it below.